Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com. Welcome back, everyone, to Real Estate 360 Live. I'm your host, Ryan Sloper, joined today by my guest, Louis Cammarosano, the general manager of HomeGain. Quick reminder, the show is designed to build the Washington, D.C. Metro's housing and credit markets one house at a time. If you ever have any questions, whether it's trying to get your credit fixed to buy your first home, whether, like I said earlier, you're in a distressed situation and you can't make your payments and you've tried to go through the modification route and you didn't have much success, many people don't. And then, you're like, well, now that my modification didn't go through, what are my options? I can let you know that there are plenty of options out there, all of which are not the end result of getting your home foreclosed on. Like I said, I always emphasize to everyone that it is important that you don't just bury your head in the sand and let the bank take your home back and then you get your credit ruined by having a foreclosure on there. Obviously, a lot of the mortgage underwriting guidelines now allow for you to be able, if you short sold your home, to be able to purchase again in 2 years, and in some certain instances, as soon as tomorrow, just depending upon whether you had any late payments on your actual credit report. We're coming up on this week's Mortgage Matters segment. This segment was brought to you by HomeGain. HomeGain is the place to get you started buying or selling a home, finding a realtor, and getting real estate questions answered. Go to homegain.com to see what I'm talking about. All you have to do is type in your home address, and you'll get an instant free estimate of your home's value online. It's a great way to monitor your home's value, and it's totally free. So check that out today at homegain.com. So FHA, obviously, which is a government-insured loan, they, again, have changed their guidelines. They just implemented this not even probably, I want to say it was a couple months ago, and they're already, rescinding it, where if there was a total amount of more than $1,000 in collections on a person's credit report, that they have the grounds to give an instant denial. Well, they're already rescinding this, and this is supposed to now help 1 in 3 FHA borrowers be able to obtain a loan. What's interesting about this to me, Louis, is it's kind of like, okay, FHA has been raising their mortgage insurance premiums that borrowers pay. So they have to pay an upfront funding fee to the government, and then they pay a monthly fee. And they've been raising those pretty much almost like 2 times a year lately. And the reason why they have to keep raising them is because they're mandated to keep certain amount of cash reserves in their account. And if they don't have it, their only way to get it is to go after new borrowers and take it from them. So when they implement these rules like this $1,000 collection rule, and all of a sudden now they're not getting new borrowers, guess what? They're not able to collect these fees that they need to take care of all the defaulted loans that are taking place on the other side. So they're easing the guidelines up, but they're acting like it's to the benefit of the consumer, where really I feel it's to the benefit of FHA because they need that money to keep them afloat. So while it might help consumers, it's more to keep the pockets, sort of lined for the actual FHA that is insuring these loans. And I do think, though, for people that are out there, for the lower credit score, because FHA obviously tends to have a majority of the borrowers gravitate towards that type of loan because you can get the loan. Most lenders, I believe, are around a 640 credit score for FHA. So if you have around that, you might have a few collections. So now with this rule being rescinded, if you have a few collections and the total, is over $1,000, a lot of the times they're probably they can still probably ask you to explain what they are if they're medical collections, but you won't just be automatically denied. So this is a rule, a change that I really do think that it will help more borrowers, about 1 in 3, just because in the lower credit scores, you're going to tend to find more collections than you will in the credit scores above 700 plus. So I do feel like that this is a good change that's going to take place. For how long? Oh, who knows? But
Ryan, what percentage of your clients are using the FHA loan?
Oh, and then in the Northern Virginia area right now, I would say probably I would venture to say about 55 to 60%. And it's not just because of the lower credit score requirement. It's because it also offers one of the lowest down payment options. They offer it's a 3.5% down payment. So, for people to be able to get into a house and not have to have too much out-of-pocket expense, FHA is the way to go. And if it's not FHA, if you're military, you can go VA, which is 100% loan. So, in the Northern Virginia area, even the D.C. metro area, it's very, transit area for military. So we see a lot of VA and FHA. I have started to see a trend where more conventional loans are coming back into the market, where people are actually, taking and putting, 20% down and actually, buying a home that way. But what I'm seeing is that they're not necessarily borrowing from their savings. They're taking and borrowing that money from a retirement account to put down on their home, which is what you and I discussed probably a couple shows ago, Lewis. Remember when I was telling you people would refinance, and in order to get to that 80% marker, they were borrowing from the retirement?
Right.
They're doing similar things when they're purchasing a property. And once again, I think it's a smart move, because if they're looking at sub 4% interest rates, depending upon your qualification, I mean, it makes sense overall, because they're borrowing the money from their retirement plan, a lot of the time less than 4%, and they can take advantage of the low mortgage rates, lock themselves in, so their cost of shelter for the next 30 years is guaranteed at that low rate. The only thing that they have to worry about changing is the taxes and insurance on the property, which, obviously depending upon the county and the state, they can fluctuate. But at least your main expense, which is, that principal and interest payment, is going to stay consistent for 30 years. And to me, that is critically important to take advantage of that if you're able to. Now, obviously,
you take your move now to lock down your long-term cost of shelter.
Okay, and so I get a lot of questions from listeners that it's, well, I'm not in a situation where I can purchase. My credit is banged up, and I don't know what I'm supposed to do. Well, the first thing you need to do is probably reach out to me so I can at least look at your situation and try to point you in the right direction, whether you need to go and talk to the credit guy that I recommend, Rondy Lambeth. You need to get started somewhere. And the thing is, the longer you let time go on, the further you're getting away from your end goal of being able to own a home. I mean, I'm not going to sit here and say that every single person that's got, terrible credit, we're going to be able to turn around in 30 to 60 days. But what I will tell you is that you'll probably be able to get it turned around in maybe 6 months to a year. And if you take care of that right now, you can be moving closer and closer to your end goal. There's certain situations, though, where you might be able to, it might only be a minor 1 or 2 things on your credit report that are holding you back from buying right now. And if you might be able to expedite that process in 30 to 60 days. So, don't just think because somebody told you, maybe the first lender that you talked to said, and this happens a lot, where they walk into a bank, the bank pulls up their credit report, and they just say, you know what, you don't qualify. And they say, why? Well, your credit scores aren't where they need to be. The bank typically doesn't take a proactive approach to tell them, hey, this is what you need to do, either talk to a credit repair guy to be able to get that fixed. They just kind of send you on your merry way. And, it's kind of, I don't know. I just feel like that's always the wrong thing to do, because these are people that want to buy, and a lot of them probably just haven't even been educated on the credit system and the credit scoring system and how that works and is operated. I can't emphasize enough that I've talked about this, for the last 2 years on this show, that in order for a creditor to report something on your credit report, it's not any government law or anything that says anybody has to report something on your credit report. It's just basically when a creditor chooses to report, they have to report 100% accurate information, 100% verifiable information, and it has to be 100% timely. If it's not any one of those 3 things, it has to be permanently deleted off your report. Now, I know you're probably saying, well, I've been fighting with the credit bureaus and I'm not getting anywhere. Well, I hear that story all the time, and the reason why is because you typically don't know the type of letters to send them to make sure that it's not going through their, just getting tossed out through their automated computer that just scans these letters and looks for certain keywords. And I'm not the one that does this. Like I said, I pass all my clients on to Rondy Lambeth, who's a credit repair guy with phenomenal success rate. You can actually check all your progress and stuff online. But the crux of the matter is that, I would venture to say that probably, 50, 60% of United States, people in the United States have subpar credit. And this is going to be the major thing that's going to hold you back from getting a home loan right now. with the banks and lenders really tightening up with their guidelines, you need to be able to, when you do apply for that mortgage, to be able to have a strong footing. And the best place to start is with your credit score. Obviously, you can have other compensating factors. You can have, a larger down payment. But at the end of the day, if you were to consider yourself as a person lending somebody money, if you didn't have a history of paying things on time and you had collections kind of all over the place, you might have had tax liens that are showing up on your credit report. The bank, you're not going to lend that money to somebody else. So why would you think that the bank's going to lend to you? And a lot of it could be old stuff. And I get this a lot of the time, Lewis, is that I've already paid that. I don't know why it keeps showing up on my report. And well, my first question is, okay, well, did you get anything in writing that said that, after you paid that, it was paid in full and that it should be deleted off your report? Most of the time they say no. And if it was a collection company, they got to go back and try to track down that collection company to get a letter after the fact. Good luck doing that. That's probably not going to happen. So the one thing that you can do there is go back, and like I said, you need to work with a professional that understands this and challenge those things that are on your credit report for the validity of them, to make sure, have them provide the proper documentation that allows them to report that stuff on the report. If they can't do it, then it must be permanently deleted from the report. The last part of this is that, everybody's asking, well, was there anything that can't be deleted off there? Technically, anything can be deleted off if it's not accurate, if it's not verifiable. And if the creditor doesn't get back in the allotted period of time, which is typically, I think, between 40 and 50 days from the time that you send something in, then it must be removed as well. So don't take just because right now you have bad credit and assume that you're not going to be able to buy a home. You may not be able to buy a home today, but you might be able to buy a home 6 months to a year from now and take advantage of the extremely low interest rates that are just absurdly low. We're coming up on a break. When we come back, short sale assistance for military families. Fannie Mae and Freddie Mac is creating this new program. Let you know what that's all about when we come back.